In this video, you will learn the best Fibonacci levels for trading Forex and Gold. I will share with you the correct and proper settings for Fibonacci tools, and I will show you how to use and draw Fibonacci's on a price chart properly. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. First, let's start with the Fibonacci retracement levels. In order to draw Fibonacci retracement levels on TradingView, we will apply the Fibonacci retracement tool. And once you draw that on a price chart, you will see the default Fibonacci retracement levels. Double-clicking on any Fibonacci retracement level, you will see the settings window. And here we should remove 236 level. It is a very weak Fibonacci retracement level. And also we should remove the extension levels 1618, 2618, 3618, and 4236. Our powerful Fibonacci retracement levels are 382, 05, 618, and 786. And we also keep the 0 and 1 levels. In order to draw Fibonacci retracement levels properly, first you should identify the price action leg. If you identified a bullish price action leg, underline that. You should strictly draw the price action leg from the lowest low of the leg to the highest high, taking into consideration the wicks of the candlesticks as well. And then you draw the Fibonacci retracement from the low of the bullish impulse to the high of the bullish impulse. That is a correct way to draw Fibonacci retracement levels based on a bullish price action leg. And if you want to draw Fibonacci retracement levels based on a bearish price action leg, first underline this price movement from the highest high of that move to its lowest low, taking into consideration the wicks. And then you draw the Fibonacci retracement from the highest high of a bearish leg to its lowest low. That is how we correctly draw Fibonacci retracement based on a bearish price action leg. Now let's talk about Fibonacci extension levels. In order to draw Fibonacci extension levels on TradingView, you should apply the Fibonacci extension tool. Drawing the Fibonacci extension levels, you should modify the settings first. Double-click on any Fibonacci extension level that you see, and here you should remove all the retracement levels first. Then you should take away the 3618, 2618, 4236 level, and you should add 1414 level and 1272. The most powerful Fibonacci extension levels are 1272, 1414, and 1618, and you also keep 0 and 1 levels. To draw Fibonacci extension levels of a bearish price movement, you should underline that first. You should underline the bearish impulse from its highest high to its lowest low. Then in order to draw the Fibonacci extension levels of that bearish impulse, you should draw the Fibonacci extension from the high of the impulse to the low of the impulse. That is the correct way to draw a Fibonacci extension on a bearish price action leg. Traders, for more free trading education, subscribe to my Instagram, the link in the description below. To draw Fibonacci extension levels of a bullish price movement, first underline that from its lowest low to its highest high, and then draw the Fibonacci extension levels based on that price action leg from the low of a bullish impulse to the high of the bullish impulse. You draw the Fibonacci extension levels, and here is the correct way to apply the tool. Remember that you can draw Fibonacci levels based on different price action legs, and quite often you will encounter the situations when the Fibonacci levels of different price movements match. Look at the price action on gold. Here we have a lot of different price action legs. We have a strong bullish movement right here, we have a strong bearish movement right here, and we have the recent strong bullish movement here. And based on all these price action legs, we can draw the Fibonacci retracement levels. First, let's take our longest price action leg. Let's draw the Fibonacci retracement levels on that. Then let's take our bearish movement, and again we can draw the Fibonacci levels on that, and then also let's do that based on our last bullish impulse. And if you pay close attention to all the Fibonacci levels that we have on the price chart, we have a narrow area right here, the area where the Fibonacci levels of different impulses match. That is going to be a very significant price level. Such a level will be called the confluence zone, and we can expect a strong bullish and bearish reaction of the price to that zone in future. You may also spot the confluence of multiple Fibonacci extension levels. Look at the pound cat pair. We have multiple strong bullish impulses right here, and based on all these bullish impulses we can draw the Fibonacci extension levels. First, let's take our last bullish impulse and draw the Fibonacci extension levels based on that. Then let's take our second bullish impulse and draw the Fibonacci levels, and then let's take our longest bullish impulse and draw the Fibonacci extension levels based on that as well. You can see that we have a lot of extension levels right here, and you can see that right here 1 to 72 Fibonacci extension levels of different impulses match. It will be the confluence zone, the zone that can be very important for the market in future and from where a significant bullish or bearish reaction may initiate. The confluence of Fibonacci extension and retracement levels will indicate the most powerful and significant price levels. Take a look at European pair. We have a significant bearish impulse right here, and after the completion of this bearish impulse we saw a strong bullish movement. Based on our bearish impulse we can draw Fibonacci retracement levels, and here are the significant Fibonacci retracement levels based on this bearish movement. Then we can also draw the Fibonacci extension levels based on our bullish movement, and if we do that we may notice that right here we have a very nice confluence of Fibonacci extension level of our bullish impulse and Fibonacci retracement level of our bearish impulse. That is gonna be the most significant confluence zone, the zone where the retracement and the extension levels match, and in future we should pay very close attention to that area, because from there a strong bearish movement may initiate. I apply Fibonacci levels that we discussed for more than 9 years. They proved its efficiency and strengths in trading different financial markets. Let me know, traders, in the comment section if you have any questions. Also, traders, do not forget to subscribe to my Instagram, the link in the description below. Also, traders, please watch my other videos.